Good morning, ladies and gentlemen, and welcome to the RBG Holdings investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please simply type in your question at any time throughout today's meeting and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll notify you when they're ready for your review. Before we begin, we'd like to submit the following poll, and if you give that your kind attention, I'm sure Nicola and the team will be most grateful. And I'd now like to hand over, if I may, to Robert Parker, CFO, and Nicola Forstall, CEO. Good morning.
Good morning. Thanks, Mark. And good morning, everyone. I think that on the basis of previous polls that we've done after we've presented, that most of you are existing shareholders. So I am going, during my presentation, and I'm sure Robert will, to assume a level of knowledge. If that is remiss of us or we go too fast over a point, do feel free to ask a question for clarification. So to introduce myself, I'm obviously Nikki Forstall, took over the commercial management in 2016, having previously built and run other companies, including one of which was Brands Hatch Leisure PLC. And I'm joined today by my group CFO, Robert, who needs little introduction. So moving to an overview of the business. Many of you have seen this before. It hasn't changed since our interims. We have RBG Legal Services, which is our legal services division, which is the owner of the Rosenblatt and Memory Crystal brands, and then our other separate entities, LionFish, Convex, and a small investment, very small, in Adnitor, which is our own IT based solutions. What I always do in our presentations is just remind everybody of our strategy. I think it's really important as a management team to always be held to what we set out we were going to do at the time of the IPO, which is now many years ago. And that was to grow the legal business itself and to focus only on high margin businesses or into achieving high margins and focus on commercializing those businesses where we can. We're obviously looking to align remuneration with shareholder interests and use equity participation, something we'll see more of hopefully during the course of this year. Using selective M&A to build and diversify the business where that fits with our overall strategy, and using our legal expertise to move into litigation finance. So how are we tracking against that objective? Our legal services business has obviously grown substantially and now is 80% of the group since we acquired Memory Crystal. And we have also successfully diversified our revenue such that we have reduced considerably our reliance on any one partner or any one client. We have already successfully moved into litigation with the investments in RBGLS's own client matters. And it's important to note that not only do we have the ongoing Rosenblatt investments that you'll be familiar with, but we acquired 4 or 5 other smaller investments that were on the Memory Crystal book. So we have got considerably more investments that we're holding now than we did before. And obviously LionFish has been successful, if we look at the next slide, and since its inception has disposed of 6.4 million of its investments, making it profitable in every financial year. Convex, and Robert will talk about this in a bit more detail, has obviously recovered extremely well in 2021, and he'll talk a little bit about how we hope it will perform in 2022. We've engaged in a successful consolidation and integration of Memory Crystal, and we targeted certain margins which we were very cautious about at the time of the acquisition last June. We talked about 20-25% and hoping to get back to 30%. You'll see here that we've had a very successful integration process, and we've got a sustained net margin of 29% already at the end of this year, and we are now targeting a 35% over the medium term. So that is a big win and shows that the integration, which I'm going to take all the credit actually, because I said I wanted to step back in and run that business to lead the integration, but that would be entirely unjustified to take all of that credit because it was a huge team effort. I still have an integration director who is taking a lot of responsibility for that. And of course, Robert and his finance team are, by being very tight, also contribute hugely to that success. So it's very much a team effort. I'm now going to hand over to Robert to take you through the detail behind Convex and LionFish.
Hi, good morning, everyone. So just to review Convex and the performance of 2021. So I think just to reiterate the statement that we went out with this morning, Convex delivered 14 deals during the year, generating 9.4 million of revenue. It's got a strong pipeline. We have 22 deals currently in that pipeline at different stages of completion. But you'll all be aware, as well as I am, that even though they're at stages of completion, then the opportunity for them to go through and be successful, there's still some flexibility in that. For me, it was just to reiterate a little bit around Convex that when we acquired the business, that they consistently delivered circa 8 million a year and 12 to 13 deals. So the impact of COVID was quite significant on them last year. They did 2 deals and 1.6 million in revenue. But what we're seeing this year, and I think it is right to say that it's probably Convex's best year ever. They've just gone back to their consistent delivery of what we saw before we acquired them. If we can move slightly on. Yeah, just to add around Convex as well, part of the reasons around why we liked Convex and why we acquired them is that they're not a passive M&A business in any shape or form. Mike and the team at Convex do a significant amount of work or data mining on acquisitions. So they actively go out and look for these with a perspective of they know what buyers are looking for. So from our perspective, it's great to see them coming back and delivering the results that they used to deliver. And we hope they will continue to do that. And they've got a strong pipeline to give them every opportunity to continue with that success into this year as well. Talking a little bit about litigation finance. And as you see, we break down, and Nikki touched on, we've got two types of investments. We've got the more complex and larger cases in our RBG legal services, where we are in control and delivering the legal services into those litigation investments. And then LionFish, the litigation finance business that was set up that only invests in third-party cases. So LionFish, and just to reiterate, doesn't invest in any of RBG legal services cases in any shape or form. And to do some of the stats around, like all investment businesses, we see a number of different opportunities. Up to since May of 2020, we've reviewed 500 odd investments, and we've only made 10 active investments. So it goes through quite a stringent process in order for us to make our final decision. Of those 10 investments, we committed 10.5 million. We've deployed currently around 3.6 million, but we've also made some partial disposals of those assets, or our percentage of that settlement, 6.4 million to date. And the average expected settlement date, LionFish is slightly shorter time frame, 2 to 3 years from the investment to the settlement of the case. But obviously these are all variable, and it's very difficult to predict these, but that's the sort of time frame we've invested in. And just to reiterate, we've had 1 successful completion since the start of the business. Okay, hand back to you, Nikki.
Thank you. So just to reiterate from our trading statement that we are 10% up on trading, and that there are still adjustments in terms of the one-off costs of integration and acquisition. And when they are added back in, we are actually on market. So the integration has been successful, and I know that there will be questions around the ongoing press coverage on the labour market and associated costs. And I believe some industries are facing challenges around labour costs and the labour market. I think our view on that, and we are not seeing the same pressure at the moment at all. But we should also remember that this industry is a highly paid industry. This is not a manufacturing consumer retail industry, and therefore, the average wage is incredibly high already, and generally people are well paid. There is definitely some pressure in what I would call just post-qualified PQE 2 years to around 4 to 5 years. But that is generally caused by lack of supply and who is coming into our sector and who is qualifying in different specialisms. So in terms of our outlook, do we think we're going to have wage pressure in the same degree that you're seeing across other sectors? No. Do we have the usual cost of living wage pressure that you would normally expect to see? Yes. But nothing that so far is unexceptional. In terms of our outlook, it's obviously extremely strong. Well, actually, extremely strong is probably a little bit ambitious, but it's certainly strong. But we do move in particularly in LionFish to starting to report our returns on investment. So we will be looking to move away from our de-risking strategy. We won't be looking to sell down our investments in 2022. And therefore, it's time to see the proof of concept. So there are elements of challenge in there, elements that are not slam dunks. So it remains a good position, but it's time to see how much we can deliver back on that. So that is a big change for us in 22. But the demand for legal services, which is obviously a largest part of our business, remains strong. And I feel comfortable that the business generally continues to perform well, and the pipeline in all areas looks extremely good. On M&A, we've said before that we would look at high margin businesses. The Memory Crystal acquisition was for us very strategic. We wanted our full service legal offering to be far more comprehensive than it was under the Rosenblatt brand alone. But that in itself means that we think we've achieved that objective, and we don't see ourselves necessarily buying any other full service legal businesses. So our M&A activity is focused on specialist high margin areas of both law and associated professional services businesses that would support the group's strategy. Thank you very much, and I'll move to questions now, Mark.
That's great. Nicola, Robert, thank you very much indeed for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while Nicola and Robert take a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. Nicola, Robert, as you know, we received a number of pre-submitted questions from investors ahead of today's event, and I just, if I may, wanted to start off the Q&A with those. The first one reads as follows. May I ask about your commitment to all employee share ownership?
Yes, I mean, ideally, you want all employees to be owners of your shares, and obviously our bonus schemes are all geared to achieving that. At the top end, we have long-term incentive plans that reward performance, particularly at senior level. But even lower down in the organisation, all bonus schemes achieve a 50% of that bonus goes into share ownership. So ideally, that would happen. And just to remind everyone, we do have an employee benefit trust. So those shares already exist and are taken out of the employee benefit trust to satisfy the majority of those bonus schemes.
That's great, thank you. Perhaps turning to you, Robert, if I may, how is the Convex pipeline build and execution performing relative to your expectations?
I think the Convex build has been the strongest it's been for a long while. I think everyone will appreciate it was last year. It appears to be it's moving into this year. It's been quite a strong M&A year and market. So the expectation for us is that they're on expectation, if not slightly in front, and they continue to build on that pipeline.
That's great. Thank you very much indeed. If I may, Nicola, maybe one for you. What do you believe it will take and when to re-rate your share price to where it was last year?
$1 million question, everyone, isn't it? I do believe we're at the mercy, to a certain extent, of the market. We've seen a very volatile and unstable market. There's bad news dripping in all the time. I think our bounce today reflects the fact that there was some bad news overnight out of the US. And then to a lesser extent, we are a victim of the fact we have a nice, strong retail shareholder base in yourselves. So, and those shareholders come in and out to take profit and depending on what dividends are being paid. So we have a plan to re-engage with more institutional support to enable us to create a better stable base for the price. And then engage more regularly with the market and with yourselves to achieve some stability. But in terms of the re-rating, I think we would like to see it happen in H1 this year. We will be working hard with the market to try and achieve that, but we are very much at the mercy of the news flow.
That's great. Thank you very much. And I think perhaps the two final pre-submitted questions, Robert, if I may, are direct towards your good self. The first one is, to what extent do you see inflation potentially impacting the business, and which measures have you in place to mitigate?
Nikki touched upon possibly the key one, which we manage and are managing, which would be the wage inflation. But as she also highlighted as well, that we're in a sector where it's very well paid already. So that's one thing that we're constantly managing and constantly look at. And the other perspective is, so we've not seen significant impact as of yet, but each year we treat the money like it's our own. So we're constantly trying to drive a better deal without undermining the service that we give to support the business. So we're proactively managing our cost base as best we can, but we've always done that. So it's not a reflection of what's going on with inflation. It's just the nature how we run our business.
That's great. And the final question, I think, has got 3 or 4 questions within it, so I might just break this down one by one. What is the average EBITDA or earnings multiple you pay for acquisitions? That's the first one.
I think historically it averages out around 6 times EBITDA.
Thank you. How are we different versus competitors who are looking to acquire the same targets?
We generally don't go for the same businesses, if I'm brutally honest. I think of all the acquisitions that we've done and that we've looked at, we probably have only come across 1 or 2 where we've been in a competitive environment. We prefer to do it off market. We look for the businesses that we want to acquire, and we're not particularly interested in getting in a squabble with some other competitor around that business. So we actively manage that part of it ourselves. So that perhaps answers the question.
Thank you. And then the final part of the question is, what is our long-term organic growth and total growth target, including acquisitions?
I think you will see that we've to go out long term. I think it's quite a hard thing to do, but you'll see in the latest note, and some of the guys might not have picked that up, but Singers have gone out and projected up of 2020 through as well, showing some growth through there. So I'd rather not be totally specific, but yeah, there are some numbers in the marketplace.
That's great. Well, look, thank you very much, guys. That takes care of all those pre-submitted questions. And thank you to those investors indeed that did submit questions ahead of today's event. And of course, thank you to those that have submitted them throughout. And now, maybe if I may, Nicola, if I could hand back to you and Robert to read through those questions. If I could ask you to read out the question and give a response where it's appropriate to do so, and I will pick up from you at the end.
Sure. Thanks, Mark. So David B, you asked us to quantify the 10% of market expectations, seeing that those expectations are in the public domain. Could we add a note in future as to what those expectations are? This goes to a point I've been asked about before, which is those expectations are written by analysts, not by ourselves. So that's why our trading statement does not contain that information. I have got it on my desk this year to look at research that'd be available to the retail market. So that's top of my list. Broadly speaking, the adjusted EBITDA expectation was 12.6 million, and it's now 13.9 million. Alan C has asked about the Elephantines cases, Shango, Neptune and Mercury, and said that we've indicated that these would come through in 2022. Does that remain the case? To be honest, I'm not sure. I think that there are many trials this year that are planned across 2 of those cases, the strategy for which is obviously see how those go, and then it depends on the outcome of those hearings as to whether settlement negotiations would start then. So I don't have a clear indication on that. The other thing I wanted to say and remind the market, we have said this, I think, late last year at the interims. We have joined with Burford in deciding that we will not comment publicly on individual cases anymore. Like Burford, we too have had situations where the defendant has used information that we've put in the public domain in hearings, and obviously is monitoring our investor communication in order that they can use it against our clients. So we won't be making any further comment on that, unfortunately. Atif, and I'm sorry if I've said that wrong, has asked, and there are several questions here, so I'll go through them. And the first one, Robert, is for you. How do you think about choosing between debt pay down and increasing the dividend?
I think part of it, that on the dividend perspective, Nikki set out at the IPO. She set out a strategy of distributing 60% of profits to shareholders as part of her strategy when she listed the business. So that sets a base, I think, for what we're doing. We've actually split our debt between the term loan, i.e. for the acquisition, which we're paying down over a period of time, and then we've got a rolling credit facility that we use to manage the working capital movement within the business. So I think that potentially picks off that part of it. Nikki? So,
Atif, question 2 and 3, I think we've covered in earlier answers and in the presentation, but do ask again if you have any further question on that. He then asks, in terms of M&A, would you consider further legal M&A, or would you prefer to move into adjacent business lines such as accountancy and corporate recovery? I think that we do look at all high margin professional services. There's still some to play for in legal M&A, so there's no question that's on our agenda. And there are a couple of areas in adjacent business lines. I don't think we're going to go for accountancy. I really don't think that's in terms of low-hanging fruit, that isn't low-hanging. They're better run businesses than the legal businesses broadly. The next question is, how many partners have left the business post the integration of Memory Crystal? And the answer is none. And what is the involvement of Mr. Rosenblatt in the business? Ian continues to be stepped back from being senior partner of Rosenblatt. That's been taken on by Tanya McLeod, who was his equity partner in building the business over the last 30 years. He stepped back from that role. He continues to client develop and be active in referring clients in, as he's been in the last 3 years. He continues to have no management involvement at all. Atif asks, 7.5 years from now, what is your vision for the group and what are the key challenges to achieve that? I think, it would be remiss of me not to think that being in a people business and managing a large amount of very clever, sophisticated people is not going to be challenging. It is challenging. In terms of my vision for the group, I still believe that we provide a fantastic platform for entrepreneurial people like Mike Driver, like Nick Davis, like Tetsu Shikawa, to operate their businesses and do so with our commercial support, our corporate support. Obviously, life is now full of corporate governance and rules. We take care of all of that and we help fund those businesses and we provide the debt structure and working capital around them. So we do think there's an opportunity to grow. We've always said we'd like to see ourselves being several times larger than we are today, although I think we are actually worth a lot more than the market cap suggests we are today. David B asks again on Convex, are the market conditions continuing to be supportive? I've heard about the great resignation, but there appears to be a great retirement of business owners. Are these conditions temporal? Robert, what do you think?
I think to the latter point, has always been common in the market. So there's always a stage of development of a business that a business owner will want to capitalize on the value that they've generated. So I don't think it's a period of what's happening now. I think that's consistent throughout the whole continual cycle of businesses. The market was busy last year, probably from a little bit of a bounce back from COVID. But as I said in my statement, Convex has consistently delivered around 12, 13 deals. So that could add evidence to the fact that at a certain stage, people will want to realise the value that they've grown into a business. I think what Convex do is connect the buyer with a seller at the right time.
Thanks, Robert. Tim asks, why have the number of Convex cases in the pipeline, I assume he's referring to, I've inserted the word pipeline, dropped from 36 in September to 22 now, when only 6 deals completed in September? And I think, Tim, the answer to that is going to be that there's some error probably on the September pipeline when it was put together. And I think what there was double counting of future pipeline with what was in execution stage in the September numbers. But the 22 is accurate. And Tim also asked what progress on a CEO, but it's actually a COO for RBGLS, and he has been recruited. It's a man, and will be joining us on the 21st of February. So right on deadline for me to be out of that job by the end of February. Tim asked further, Robert, if you could take this one, please explain the increase in net debt since H1. I assume you mean 2021 H1.
Yes. There's been a subsequent payment of the deferred payment on Convex. There's been a payment of an interim dividend, so they would account for the major movements in it effectively.
Thank you. And David asks again, the dividend of 3p is described as an interim dividend in the RNS. Do you anticipate a further final dividend? We tend to pay interim dividends twice a year. One now for the year ended 2021. That will now complete all the dividend we'll pay on 21 results. The next time generally that we look at a dividend is for the half year, and an interim dividend is usually paid, if there is one, which obviously I anticipate there should be, in September. We don't generally look at a final dividend. And David also asks what the drivers are in the legal services market, as it appears to be booming. Drivers, I mean, it is incredibly busy in all areas, both litigation, corporate, commercial, and real estate. Some of the drivers are obvious. Real estate, there was changes made by the government, or temporary changes around stamp duty and other taxes. Certainly last year, there was a concern that CGT would raise, so that meant there was a stimulation of deals. It's unusual for both sides of the house in terms of contentious and non-contentious to be so busy at the same time. And I think there's a little bit, and this is a gut feel, of post-COVID frenzy, sort of we're out of get out of jail freedom that's driving it as well. But it's not easy to get a handle actually on what, other than of course the fact that there is still considerable money coming in for corporate deals. Robert, for you, how much were unrealized gains on litigation finance assets in 21?
Our carrying value of our litigation assets is below the cash amount that we've invested. So I would say there aren't any realized gains within the litigation finance assets for 2021.
And James asks, can we confirm the remuneration structure we've been in place at Convex this calendar year, i.e. has the amended earnout structure whereby success fees were invested into RBG actually now been satisfied? So the commission structure that saw them buying shares in the open market has come to an end as of the end of December 2021. We are in the process of replacing their scheme with a new incentive scheme, which we're not yet in a position to confirm. We're still working on that. When we do confirm it, the market will be told. And Steve asks, great to see progress towards 35% margin in legal services. Any targets as regards headcount growth in legal services over the next couple of years? And I'm going to share this one with Robert because it's our favourite subject, that there is this myth in legal services that the only way to grow revenue is to add people. And what that tends to do is drive incredible inefficiency. And if you do spend any time looking at our metrics versus our competitors, you will see that in every case, whether it's revenue per fee earner, margin, we are always more efficient. And therefore, it's a bit of an anathema to say that we will simply grow heads to grow revenue. And it's all around how you price, structure and scope your work, in my opinion. Robert, do you want to add to my answer?
No, I think the only thing to add is that, you know, we've already got very good people within the business. So you're just adding more people doesn't mean it drives through to incremental revenue and profit. I think the thing that we look at as much as anything else is not just about growing people, it's about growing profit. And that's a fundamental perhaps difference to us and other people, really.
Tim asked, does the fact that LionFish made no new investments in H2 reflect the general market or balance sheet constraints? It's funny you should mention that, Tim, because when I saw that yesterday, I questioned it, wrote it down to go and check, and never actually finished doing that work. I think we did make an investment. I think maybe it closed after the year end, so maybe it slipped into 22. But it's certainly not balance sheet constraints, and it's not general market. And you can see from the inquiry level that Robert showed on his slide, which I'll go back to, is still very high. Yes, and Tets, who's actually listening, has confirmed we did make an investment and in Visa in September, which I thought we had made. And so I'm not quite sure why that is. The 10 has not been updated. So that's an error on our part. But the cash numbers on this slide are correct. So I did make a note, as I say, to go back and check that, and then forgot to do so. Yes, we made one and we had one successful outcome, so it's netted down. Thank you, Tets. Of course, we have one successful completion, so that's why. He should be doing this, not me. Tim also asked, what is the medium-term solution for funding LionFish? Again, we have work that we're doing on this at the moment. We haven't quite completed that work, and we when we do, we'll be able to come back. And in fact, it is my intention to bring Tets with me and do another one of these presentations in February to give you an update on LionFish's strategy and how it's doing against that strategy. Emmanuel asked, can you provide a brief update on the big cases? I think I did mention earlier that we have made a conscious decision with Burford that we won't comment publicly on these cases because it is sometimes being used against our clients. David asked, looking forward to the full results and greater detail being provided, what key metrics should we be looking out for to gauge your progress and performance in the future? Robert? I know what I look at, but... Yeah,
I think we focus on EBITDA or an EBITDA as a percentage of revenue because it's about profitability. And in the nicest possible way, you can grow the revenue, but if it doesn't impact onto EBITDA on the same measures that we look for, then there is no progress really. So I look at EBITDA, profitability basically. Nikki has other metrics. In the legal services business, we look at revenue per fee earner, we look at contribution per fee earner, which possibly don't get published, but there are other metrics around that. But yeah, I think for us there is a focus on EBITDA because generally that's the cash that you're generating in the business.
Gareth asks us if we can explain in layman's terms why a payment of 1 million was made to Ian Rosenblatt last year and why it's capitalised on the balance sheet. I'm not sure where you're getting your information, and I will ask Robert to clarify in a minute, but we haven't made a payment of 1 million last year. It was made in 2019, and it was an extension of covenants that we acquired under our SPA share purchase agreement when we acquired Rosenblatt into the group. So, Robert, do you want to add anything onto that?
The standard treatment is that you capitalise it and write it over the period of the agreement. So that's why it's done that way and signed off by our auditors as well. It was the proper treatment of that.
Andrew asked, how comfortable are we with the current balance of the business in terms of transactional work, considering the active market conditions in the past 24 months and a potentially more difficult outlook? That we're a lot more comfortable because, today the business, when we came to market, 100% of our business was Rosenblatt, 80% of our legal services were dispute resolution. Today, contentious is around 35-40% of our business. And then the remaining non-contentious is split quite evenly again between corporate and real estate. So we've got an incredibly broad mix now of business. And of course, we've got Convex and LionFish. So One of the things that I'm very passionate about is that we believe that we were creating effectively a business that has a natural hedge in it. When one area is doing well, another area may be weak. The pandemic is proof of that. None of us saw it coming. Convex nosedived understandably at that time, and the rest of the group performed well and carried the group. This year, Convex has bounced straight back and has done very, very well, and has helped out other areas of the business. That is the whole strategy. The whole strategy is to have a balanced portfolio of businesses within the group. Tim also asked one final question. Does the 3.2 million realised in LionFish in 21 relate to disposal of interest in new investments in 21 or further realisation of investments made in 2020? Robert?
I think they're predominantly 2021. Like 95% of it, I think.
Yeah, at least. Yeah. I'd agree. So that concludes all the questions that I have on my screen.
That's great. Nicola, Robert, thank you very much indeed for taking all those questions. And of course, if any further questions do come through, we'll make those available to you after today's meeting. Nicola, Robert, I know investor feedback is important to you guys, and I'll shortly redirect investors to give you their thoughts and expectations. But before doing so, Nicola, if I can hand back to you just for a few closing comments to wrap up with.
Yes, as I've said earlier, I think I mentioned earlier, I do intend to have some regular engagement with the market. So, and as Marcus said, your feedback is hugely important to us. So if you do have questions, I do keep tabs on what I see in the market, on the bulletin boards, etc. But do feel free either to email us or raise your questions at future presentations that I'll be making throughout the year. And thanks very much for coming.
That's great. Nicola, Robert, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as we'll now automatically redirect you to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of RBG Holdings PLC, we'd like to thank you for attending today's presentation. Good morning to you all.